Yeah, look, obviously a bit of a sort of rise there for the lithium stocks, but what about the general ASX 200? It seems to be almost back to where it was in February when it set that all-time record high. Why all the positivity when there's so much uncertainty around the world right now?
Yeah, you're absolutely right. Great, month, I think, for the ASX all in all. And it's really come from this sort of risk on sentiment that we're seeing from investors. It's been sort of dubbed the taco, right, from President Trump, and that is that Trump always chickens out. And then ultimately what that signals is the view that he is willing to negotiate, and I think the key news from that came from the 90-day pause on tariffs last month for China. And that's obviously coming after what was, the 145% tariffs that he put in place. So really investors seeing some positivity in markets going risk on. And that's shown in sort of the Bitcoin price, hit a new record high last month. We had really strong performance from the tech sector in May, up about 20%. Again, that followed through from really strong sentiment from earnings season in the US, particularly the Magnificent Seven. Obviously, the AI boom is sort of coming through. There are question marks, though, for the ASX 200 being at record highs because earnings growth next year is looking pretty lackluster, or I should say for the current fiscal year. But markets are very forward-looking. They don't look to what's happening right now. They're looking to what's going to be happening in the future, and that is fiscal year 26 earnings are set to be positive around sort of 6 to 7%. We're also seeing the cash rate come down here locally as well. And with that GDP number that we had yesterday that was slightly weaker than expected, the expectation is that we will see rates fall even further as well. Markets pricing in about another 75 basis points worth of cuts as well. So that's also very positive for the ASX 200, and that's why we're sort of sat near those record highs.
Yeah, those rate cuts have certainly helped the market. And obviously, mining makes up a big portion of the ASX 200, and the gold miners have had a really good run this year as well, haven't they?
Yeah, they have. Look, it's come from that gold price obviously rallying. The two don't always move in tandem, but when we're seeing these gold miners being able to essentially make more money from the gold they're producing, often we'll see those gold miners follow suit. And it's come at a time when we're seeing central banks buying hordes of gold in the last sort of 2 years. We're seeing huge inflows into sort of ETFs. And I think that what we're seeing is that there is a compelling case really for, this increasing long-term exposure to gold.
Yep.
I think that when we think about what we've just discussed from the uncertainty perspective, gold is really sort of continuing to create a case that it deserves a place in a portfolio.
Thanks, Josh. Sorry, Josh, we're out of time. Appreciate you coming on the show. Appreciate it.